So you've already got your break of structure here. Price came up, broke
Right.
structure, and at this point you're playing on a retrace, which you could have gotten in here. You can see you didn't quite get the follow through. Then it actually came down and actually didn't touch demand. So actually, I got in on this candle right here.
Yeah, I could see that. Yep, I see that. Yeah, and that's kind of like basically what I picked out. So I'm good with that read on
That's
that one, right?
okay. Cool.
All right, that's good. These are trades that I analyzed last week, so
All right.
we're going to be a little bit behind. So let me just
That's
see
okay.
this one here.
I like the mark. So the first on the high time frame, I like the market structure. I think it's reasonable to take your demand here. I mean, clearly you could be more conservative and started your
Yep.
base down here.
Yeah, that's a long way down, right?
But again, you wouldn't put your stop here necessarily.
No,
If
you'd
that's
probably
just
put
be
it at the gap, right?
well, what like is what I
Right here.
do. This is again for higher time frames. So I'm gonna do a what if. So let's say this price actually kind of like what you did here. Say it came down and you see these lows forming how they're holding. Just like what you did there. If you entered a trade, let's say you got in a trade right here.
Yeah.
You do exactly right. You put your lows where your stop where you got it.
Right.
Because what's a little different than the classic supply demand that Jordan teaches, on lower time frames. When I say lower, I mean like day trading, like 5 minute, 30 minute. You got to use these stronger lows because there's a lot more variability going on.
I got
What
you.
I found though in higher time
Yes,
frame, the 4 hour
I
and
got
the
you.
one, and, yep. So you got it. Yep.
That one. All right, next one here. What I do? I think I got demand zones in red here.
I like where you got your base or your fib. That makes sense. You start here where the move started. That's your top. You can see where resistance kind of held a little bit there. Never really. This would have been a tough one because I can see, like, I would have seen when this sequence right here with the first green and then the second one closed way up inside. I would have taken that trade and you would have gotten stopped out.
Right.
But, that's the thing, right? It's about probabilities, not certainties. And
Right.
sometimes it works, sometimes it doesn't. And that one
Right.
just would not have worked out.
Now let me ask you a question on this trade. If you would have got in here, your target would have been here, right? Somewhere around there.
If I was let's say if you got in at this candle here, right? To
Right.
make my risk reward worth, I probably would have targeted
This one.
that zone up there.
Yeah,
Because
okay.
I'm expecting, you can see you've already had, if I draw a straight line from that 4 hour, you see it's been tested once right here.
Yeah, here, right? Yep. No, here, right? Okay. Yeah, I got
Yep.
you. Yeah, I guess it's just something that you pick and then you watch and then you decide what happens. Okay.
Yep.
Let's see on
That's
UAL. This looks like it might have been a good trade or might be still
yes.
on the second candle up. Boom, in, and your target would be all the way up
So
here. So
yeah,
that would,
and talk about again expectations of the trade. What I would do is I would map out this resistance zone right here.
so
So
would
just
it,
know that you're likely going to get some resistance along
with
that
this
candle
gap
right there.
fill here?
Actually, pause right there for a second. So when I just know when I'm talking about resistance, what I do is I'm gonna give you an example. See this candle right here?
Yep.
See how right here price came in and rejected off of that, the midpoint. So what I do is I'll
Okay.
draw a box from the base to base and use the midline. And a lot of times they'll see that resistance will hold. So the same thing is likely to happen over here because you're going to see it. Doesn't mean you don't trade it. It just means you know what to expect. It's going to probably do this.
So you're looking left for, yeah, okay. I see. You're looking left. I got it. Yeah, because that's the
Yep.
only resistance that's there except for the top.
That's right.
Yeah, okay. And then we got this one here I picked out.
Hey, man, you doing it, dude.
See, this is where that red candle comes into play, that question I had.
Okay, which one you were talking about?
So now this trade here, this red candle here, if this goes
Okay.
to a higher green up here, you got a red in between two greens, right? This
Right.
green looks like it's a little bit above this one, so it's going up. And then you
Yep.
have a third green candle that comes up to here. Let's say it closes there. Is that a good
Yep.
trade because of the red candle in the middle?
It's okay as long as my read of this collectively is consolidation.
Okay.
Right? It has nothing is really, I love these 4 hour boxes. I guarantee you these candles are bouncing off the midpoint of that. See how those wicks are going up? So that's a good thing.
Trade in a way.
Yeah, I see it. You're right. Equal highs, equal lows. Yep.
Right. Oh, when you have two consecutive green candles, can it be the night before and the morning of?
When you say
or
night
the
before
same
morning,
day?
remember that it's the morning session followed by the afternoon session. So,
Right,
well, let's talk about let's say you missed. Okay, you missed this, right? This is how the day finished up, and they say it was earnings day, and you missed the entry.
Right.
I would still put an alert for right around here because it could gap down, test that, and then fly.
Right. Okay.
But just because you missed the entry, I would still watch it and see if you get a retest basically of that support.
Right.
And then if it holds, man, get it.
Yeah. So when you enter this, you're gonna have the green candle here, right?
Yep.
You're gonna have the formation of the second green candle. Is that when you're gonna get in right here?
Usually you get on the like let's say the day of, if this is what you're looking at, the first two that we're talking about, you
Right.
would get in on that second candle somewhere.
Right on the bot. Once it starts forming green, is that what you're going with?
So you're talking about the next day. So let's assume this is
No,
what
let's say
already
this is,
happened today.
let's say this is the trade right now. Okay.
So this is
let's
today,
say-
and you're looking to get in.
Yeah, this candle where I have the X on doesn't exist. All right.
Oh, okay.
Now, and I don't know what it is, but let's say this is the morning 4 hour, and this is going to be the afternoon 4 hour. When
Right.
this candle starts to formulate, that's where you go in
Correct.
on the green.
I say like, between, because I think the first candle, technically, is, it's not an even 50-50 split of the day. I think
Right.
it's like 1:30, I think the next candle starts.
Whatever. Yeah.
So what I would do is, give it an hour. So let's say from 1:30 to 2:30, see what shakes out for that second half of the day,
Right.
and
Okay.
then jump in. This is another good. So see the resistance at play here? Where do you see the resistance at play?
Well, it bounced here and then it bounced here.
Keep going right.
This one.
Keep going.
This one.
Right there.
Okay, you want
See what
the
happened with the
actual.
candles?
Okay, yeah, I see that. Yeah.
Now, what's actually good about this though? See how many times it's been tested?
Yep.
That means you got a high probability that thing's going to just blow right through that, because it's been tested once, twice, almost three times.
3 times it's going to go out, right?
So I would be actually more optimistic going into that trade. Probably going to blow through that.
Yep. Okay. It's not even an expensive stock. Okay. What do we got here?
Are you doing options or are you doing stock?
I'm probably going to do, what I'm going to start with is do one stock to see what happens.
All right.
And then depending on where the options are, you know what I mean? If it's not expensive, yeah, I might take a shot with an option, because
I wasn't sure.
Either way, I'm not sure yet. I'm not there yet. I'm going to be
you've
there
definitely
soon.
got that. But you're seeing the setup. I can tell you that right now.
Yeah. Okay. And this one here, what did I have? The man one didn't hit, not a return. D hit high and return. Traded second up. Okay. This was the first demand zone that I made here, and the fib. It didn't hit.
In this case, I would stick to the lower one you got.
This one here.
I would. I mean, the one down. This one right here. That would be your base for your fib.
Okay.
And I would say your ideal situation is I would draw this support box here with this midline, and I'll be looking for price to come into that and reverse. That would be my sweet. That would be my sweet setup trade. The hard part for this one would be
this big candle here.
At what point you get in, and then what will be your? Does it move very fast? Now this is where you can learn. And I have been experimenting with this, where I don't necessarily go off of the breaker structure. I go off of the reaction at support. So in this case, because you got this candle sequence here is very strong, right?
Yep.
It came down and tested this, and then just went straight up. So you can say, you know what? Based on that reaction, and it's right at the 50% retrace, I'm getting it.
With a hammer on it, with that candle with the hammer on it, yeah.
Okay. And that in fact is a good case. I would definitely. I would put this up. I don't know, however you keep screenshots of trades you like. I would save that one. I mean, I would do this every day. If you get a test of a support area that holds and a long wick, I'll be definitely taking that trade.
Right, and that has the middle red candle in there that I was talking about. Which it doesn't really actually is a doji.
But it actually supports. But you know what? But think of it this way: the bigger picture is more about what it does relative to the first candle. Don't put as much
it's
weight
in the
on
body.
Yep,
it's in the body and the top, so it's an up. Yep, I got you.
Yeah. So like this case, I would so as long as it's respecting, I call it respecting. So if it had closed inside, like down here, I would maybe be less bullish. See, this is about as bad as you want to get. I wouldn't want to get any worse than that. See that one to the left I just circled?
Yep. Because the red closed. If the red closed higher, it might be better.
Yes, exactly. So you can see just a little bit it tapped inside, but not by much. That's about as bad as you want to get. But you see it price still went up, right? And remember, it's not just the candle, but where the candle is, right? And the fact, as long as that candle's in that 50% retrace, you're basically going to be generally in this area and lower.
Yeah, if you take that trade, you're crazy. You're not winning money in the long run. Yeah, that's a bad trade. That one. the balance trades are more like demand zone trade, but like on a smaller level, right?
Kind of, yeah, it is.
Yeah.
And you just want to wait. You want to get that. I think I sent you that stuff about balance theory, right? So you waiting for that equal high or equal low, and ideally you've got some consolidation. That's the tricky part, is making sure you've got some really good consolidation that you can see. So let's kind of keep it locked what you got there. I mean, I see it here. Don't see. I mean, you kind of get a little bit here. It's almost there, not quite, but you could almost call that like this would be 0.1, up here would be 0.2, down here would be 0.3.
Right.
I don't see parallel zones of consolidation. You'd say that whole area is consolidation. It's borderline, but as you can see, it clearly didn't work its way back out up here.
Right, and then it dumped. Yep. With the balance trades, you're only going within that balance trade zone for a target, though, right?
That's right. That's right.
Right. Okay.
That's right.
Obviously, if it flies up, you can play with it a little bit more. But the optimum thing, the first target's the opposite line, whatever you want to call it.
That's right.
When you do options, you trade spreads or you just trade straight options?
Straight options. I've explored. I have one student who does that quite a bit. Just what I've learned from looking at what we call like iron condors and the like is
crazy.
You really gotta have reliable price. What you're betting on is that theta decay is going to pay you, right? I mean, that's you're betting that it's never going to get in the money, and that theta decay is what's going to cause you, because you're basically selling an option, right? And you're just covering your any potential loss by buying one as well. But you're betting on theta decay is going to help you win that trade.
I saw an option trading strategy where it's a bull put spread, but you buy another call on top of it. So what it does is limits your loss, limits your gain. But if it should blow up, you're going to get that third option to take, infinity on a gain.
Right.
And it's almost equaling itself out with money wise, because you're selling one, you're buying one, and then you're using the difference in the profit to buy another one higher, buying a call.
Right. You can paper trade a little bit to kind of get where things can go haywire for you. And we get these kind of policy shocks or things with a market or with a market jolts of an economic report or whatever. It can kill your trade. And that's a problem. The market hasn't been it's been more radically going up or radically going down, which is not good for any kind of spread.
So, you just got to pick which one's going to do puts. I'm going to just concentrate on calls because I don't want to get too complicated with it, and I think that's pretty much I'm looking at.
See how that's why I love these 4 hours. See right now, the second half it's dumping off the first. So that's the negative sign right there. Let me look at IWM, which is your small companies. IWM is not much better. Yeah, QQQ is looking really negative right now. I mean, it's dumping. So that's why when you're doing swings, just be aware of the market environment, particularly if you're playing it to the long side. So like right now, I'll be in a wait and see mode on taking any long. In fact, actually, I'm gonna go ahead and get out of my dang marathon. I got you on the phone. I'm gonna give me 1 second. I'm gonna close that sucker out right now. I'm gonna take my lumps, as they say.
Yeah, you got to do it. I got one. I'm hoping and hoping and hope. I like the stock a lot. It's not an expensive one, but it keeps dumping on me.
I've learned to just take my losses and move on, man. If you had gotten into that trade at that point right here, and you could have used that, I would still probably use that as my stop. That's a solid win there. The other one I'm seeing is see how this is what I talk about reversal. See how this candle came inside and just reversed and it closed up inside?
Right.
That was a good bullish sign because it tested the support and it held. So that could have been another good entry right there. If you wanted, you could use the base of that. That's 2 solid trades right there. One shows this is more of a closing up inside resistance. This is a reversal.
Okay.
Yep. Just want to point that out to you.